This is your LMAX Exchange technical update for Friday, January 13th, 2017. Euro dollar. So the euro continues with its correction out from the recent 14-year low at 103.41, and it will be interesting to see how things play out from here. Overall, the downtrend remains firmly intact, and so the expectation should be for a lower top somewhere below 108.75 ahead of the next major downside extension back below 103.41 and towards parity further down. So if we do see more rallies, they are still classified as corrective, with only a break back above 108.75 to compromise the downtrend. Sterling dollar. Cable rallies continue to be very well capped, and this market seems to be intent on retesting that plus 30-year low from back in October down in the 118s. At this point, it would take a break back above the high that we saw on Thursday at a minimum, which comes in around 23.17, to take the immediate pressure off the downside. Dollar yen continues to extend its correction out from the recent multi-day highs at 118.67. There is room for additional corrective declines, although the market should start to find some support into the 111.45 area, which is previous resistance, in favor of that next higher low, and bullish resumption back through 118.67 and towards 120 further up. Euro Swiss remains confined to a downtrend since breaking out several days back below a multi-week range, and at this point the pressure seems to be pointing towards a retest of the 2016 base at 106.24. Aussie dollar. Aussie's run over the past several days has been super impressive, though while the market holds below 75.25, a previous lower top on a close basis, there is risk for this run to stall out in favor of a resumption of declines back towards some key medium-term support at 71.45. Dollar CAD. So dollar CAD saw sharp declines in Thursday trade, but despite the setback below key support at 30.81, inability to establish a close below 30.81, and with the market still holding above 130, those psychological barriers, the pressure still remains on the top side, with the market overall retaining that constructive tone. Look for a higher low over the coming sessions in favor of a resumption of gains back towards the recent highs that we saw all the way up at 136. Initial resistance that's critical comes in around the 32.95 area. Back below 130, however, would compromise the constructive outlook. Kiwi dollar. So despite this round of Kiwi buying, the market continues to be showing signs of topping out off that 2016 high just shy of 75, and it looks like we could be seeing a lower top carve out soon below the previous lower top, which came in back on the 14th of December around 72.40, in favor of that next major downside extension towards next key medium-term support at 66.76. SPX 500. The S&P 500 continues to consolidate just off recent record highs around 2280. There are potential signs of the market wanting to roll over, but we're going to need to see a break back below that low that we saw on the 30th of December around 2232 to confirm and set up the possibility for a double top formation, taking the immediate pressure off the top side. But until then, the market still is focused on additional upside and could see a break to fresh record highs beyond 2280 area and towards 2300 further up. Gold. So gold continues with its impressive run out from those multi-day lows in the 1120 area. At this point, the latest poke above 1200 confirms the possibility that we still are seeing a longer-term base in this market, and the establishment and daily close above 1200 will do a good job of strengthening that outlook and opening the door for an acceleration all the way back towards the 2016 high at 1375. At this point, look for setbacks to be supported with only a break back below that 2016 low at 1122.75 to compromise the constructive basing outlook for gold.